Ladies and gentlemen, welcome back to Vietnam Stock Market's Opportunities. It's an honor to have the opportunity to address such a distinguished audience. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is +8491 432 6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyen. She's a personal financial advisor and a Viet Capital Securities stockbroker manager. You can contact her with the email home.nguyen@vcsc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trần Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you some information about VRE. VRE, in which Vingroup BIC has a 60.3% effective interest, is the leading developer, owner, and operator of retail malls in Vietnam. The company currently owns 1.75 million square meters of retail GFA under 4 different mall formats: Vincom Center, VCC, Vincom Mega Mall, VMM, Vincom Plaza, VCP, and Vincom Plus, VC Plus. And now we move to the report which was collected by Viet Capital Securities about VRE on the 22nd November 2022. With the current price of VRE is 26,150 Vietnam dong. Current target price 37,500 Vietnam dong. Last target price 40,000 Vietnam dong. Upside to target price more than 43.4%. Dividend yield 0%. TSR more than 43.4%. Retail leasing recovery to continue in 2023. We reiterate our buy rating for VRE with a target price of 37,500 Vietnam dong per share. Our 6.3% lower target price is mainly due to our more conservative projections for new mall launches in 2024 to 2027 forward. Our lower forecast for the property sales segment, 0.5 ppt higher, WACC and a 0.5 ptt higher cap rate assumption, which are partly offset by the positive impacts of rolling our target price horizon to end 2023. We maintain our 2022 forward net profits after tax MI forecast at 2.4 trillion Vietnam dong, $98 million, more than 85% year-over-year, as we continue to expect a significantly lower COVID-19 support package in Q4 2022 forward compares to 766 billion Vietnam dong, $31 million in Q4 2021. For 2023 forward, we forecast net profits after tax MI at 3.3 trillion Vietnam dong, $132 million, plus 35% compares to 2022 forward, which is driven by 1. The ongoing recovery of tenant businesses. 2. No significant COVID-19 support packages. 3. Full-year contributions from new malls opened in H1 2022, including VMM Smart City. And 4. The property sales segments finishing higher year-over-year. VRE's revenue looks attractive at a 2023 forward PE of 18.2 times based on our forecast, compared to a 6-month average of regional peer median consensus. 2023 forward PE of 25.1 times, in addition to our projected 2023 to 2027 forwards net profits after tax MI CAGR of 21% for VRE. That is a result of our expectations for additional contributions from new malls and an overall margin improvement. We believe VRE as a leading player to be well positioned to capitalize on the rise of modern retail in Vietnam by leveraging its competitive advantages, including prime locations, nationwide scale, and access to the largest and land bank in Vietnam. Downside to our positive view, slower than expected new mall expansion as concerns our challenges, and inflationary pressure could cause slower than expected sector recovery. We expect solid growth for retail leasing profits in 2023, which is mainly driven by our expectations for a lower support package year-over-year. VRE provided tenants with a support package of 474 billion Vietnam dong, $19 million in Q1 2022, but minimal amounts in Q2 2022 and Q3 2022. We continue to expect there will not be large COVID-19 support packages in Q4 2022 forwards and 2023 forwards, but do expect expenses related: 1, marketing and events during holiday seasons, and 2, support for more tenants in second-tier malls. We are not quickly recovering after 2 years of COVID-19. As such, we forecast VRE's 2023 forward retail leasing gross profits to surge 26% to 4.3 trillion Vietnam dong, $175 million compared to 2022 forwards. We expect VRE to launch new malls in 2023, which will reaffirm its position as a dominant and proven landlord. Management targets to launch 6 new malls, including 2 VMM malls, around 46,000 square meters GFA in Grand Park, and 76,000 square meter GFA in the Empire, expected in July and December 2023, respectively. And for VCP malls in Hà Giang, Bắc Giang, Điện Biên Phủ, and Hồng Hà, we forecast the 6 new malls will raise VRE's total retail leasing GFA to 1.94 million square meter by end 2023 forwards, compares to 1.65 million square meter at end 2021 and 1.57 million square meter at end 2019 pre-COVID. In addition, we project additional retail leasing GFA of 240,000 square meter per year in 2024 to 2027 forwards, which partly supports our 2023 to 2027 forwards net profits after tax MI CAGR forecast of 21%. And now we move to the 9 months 2022 recap. Profits recovery in line with expectations. Retail leasing. VCSC comments on 9 months 2022 results. VRE spent 1.3 trillion Vietnam dong, 54 million for a tenant support package in 9 months 2021 compares to 464 billion Vietnam dong, 18.7 million in Q1 2022, and a minimal amount in Q2 2022 and Q3 2022. VRE launched VMM Smart City Retail GFA of 68,000 square meter, current capacity rate of 97% in Hanoi in April 2022. In addition to VCP Mỹ Tho and VCP Trần Huỳnh Bạc Liêu Retail GFA of 16,300 and 10,900 square meters respectively, with current occupancy rates of 98% to 99% in June 2022. Property sales. 9 months 2022 results was driven by the delivery of 24 units, mainly shop houses in Uông Bí and Thái Hòa, and transfer of one project in Thái Nguyên with a lower margin than shop house delivery. Financial expense decreased year-over-year in 9 months 2022 as a result of a lower debt balance. VRA's total non-convertible corporate bond balance as of end Q3 2022 was 3 trillion Vietnam dong, $120 million, which of 1 trillion Vietnam dong, $42 million will become due in April 2023. Net profit after tax MI, the retail leasing segment in 9 months 2022 strongly rebounded year-over-year due to minimal tenant support packages in Q2 2022 and Q3 2022. Now, next, that is the 2022 outlook, significantly lowers support package year-over-year to support profit growth in Q4 2022. Revenue. We decreased our 2022 forward revenue forecast by 3% due to our lower property sales forecast in accordance with 9 months 2022 results. Retail leasing. We maintain our 2022 forward forecast for revenue and gross profits of the retail leasing segment as 9 months 2022 results were in line with our expectation. In Q4 2022, VRE will stimulate customer demand by leveraging year-end festive season. Property sales lower year-over-year due to lower forecast sales. Financial expense lower year-over-year due to lower average long-term debt balance. Net profits after tax MI. We continue to forecast 2022 forward net profits after tax MI to rebound 85% compares to 2021's low base thanks to a recovery of the retail leasing segment. And now let's go on to the next part, that is 2023 outlook, retail leasing recovery to continue. Retail leasing. Our full year 2023 forward retail leasing revenue growth forecast is mainly supported by 1. An expected lower COVID-19 tenant support package. VRE spent 464 billion Vietnam dong, $19 million in Q1 2022 and a minimal amount in Q2 2022 and Q3 2022. 2. Full-year contributions from new malls such as VMM Smart City opened in April 2022. And 3. Improving tenant sales thanks to a recovery in the retail market. Management targets to launch 6 new malls, including 2 VMM malls, 46,000 square meter GFA in Grand Park, and 66,000 square meter GFA in the Empire, expected in July and December 2023, respectively, and 4 VCP malls in Hà Giang, Bắc Giang, Điện Biên Phủ, and Hồng Hà. Property sales higher year-over-year, driven by strong unbuilt bookings, 2.9 trillion Vietnam dong, $118 million and Q3 2022, mainly at projects in Quảng Trị and Điện Biên. Retail leasing higher year-over-year due to higher sales and gross margin. Financial expense lower year-over-year due to lower average long-term debt balance. VRE's non-convertible corporate bonds of 1 trillion Vietnam dong, $42 million will become due in April 2023. Net profits after tax MI. We forecast 2023 forward net profits after tax MI to grow 35% compared to 2022 forward, which is driven by the ongoing recovery of tenant businesses, not having a significant COVID-19 support package, contributions from new malls and higher property sales. And now we move to the next part. That is the figure for VRE's malls. Malls in Ho Chi Minh City and Hanoi accounted for 60% of total retail leasing GFA and around 70% of total retail leasing revenue in 9 months 2022. NLA leased to Vin Group related tenants was 6% in 9 months 2022. Tenants under a revenue sharing scheme accounts for 20% of total tenants in 9 months 2022. Monthly footfall of VRE malls. Footfall at VRE's malls in 9 months 2022 increased 41% year-over-year. Footfall at Ho Chi Minh City and Hanoi malls in Q3 2022 recovered to 85% and 90% of the pre-COVID Q3 2019 level. Figure 7, VRE's mall opening guidance. Continue mall expansion plan with a focus on the VMM mall. This focus will provide shoppers with a wider range of services and leverage of the group's customer base, including Vinhomes residents and neighboring locals. Improve customer experience, upgrading facilities, service quality, and tenants mix for existing malls. Valuation. We continue to use a sum of parts valuation with a capitalization rate approach to derive a 1-year target price for VRE at 37,500 Vietnam dong per share. Leasing activities. We apply our specific cap rates for each mall type depends based on mall locations per rates, with our assumed cap rates of 7% for VCC, 8% for VMM, and 11.5% for both DCP and DC Flex, which are 0.5 PPT higher than our last update report due to factoring a change in our market rates premium assumption and the higher cost of debt environment. For operational malls, we apply our zone-specific cap rates with our projected 2023 forwards and OI for each mall compares to average 2022, 2023 forwards and OI in our last update reports. For identified pipeline projects, we apply our zone-specific cap rates with our estimated average NOI in 2026, the 2027 forwards. We then discount back to the end 2022 revenue with a WACC of 12.8% compares to 12.3% as previously. We also note that all valuations take into account the current carrying value and future capex outflow, which are based on our estimates. We expect the new GFA from identified pipeline projects to continue 17% of our RNAV for BRE. Property sales, we use our projected 2023 forward earnings with an unchanged targeted PE at 9 times to derive this segment's valuation. Our target price of 37,500 Vietnam per share is 6.3% lower compares to our update report. Last update report mainly due to one, our more conservative projections for new mall launches in 2024 to 2027 forwards, with an average additional GFA of 240,000 square meter per year compares to 350,000 square per year previously. Two, our lower revenue and gross profit margin forecast for the property sales segment, and three, a 0.5 PPT higher WACC and a 0.5 PPT higher cap rate assumption, which are partly offset by four, the positive impact of rolling our target price horizon to end 2023 forwards. Figure 10, valuation summary. Figure 11, BCSC assumptions for WACC. We have selected peers that are leading mall developers in their own markets that share similar economic fundamentals with Vietnam. We think RNAV is an unsuitable metric to compare VRE with its peers because each company should have its own RNAV value based on the nature of its business model. As such, we look at consensus forwards PE and PEA multiples, forecast earnings growth, and ROE as starting measures to compare VRE with its peers. VRE also maintained a healthier leverage level compared to peers at SLQ. Net debt to equity was less than 3%, compares to 118% for peers. Throughout H1 2020, the share prices of VRE's selected regional peers were under pressure due to investor fears regarding COVID-19, moving into the late 2020 and 2021, their share prices recovered amid market expectations for a recovery in shopping mall earnings with the development of COVID-19 vaccines throughout the world. For VRE, the fourth wave of COVID-19 in Vietnam weighed on its earnings performance in H2 2021 and Q1 2022, thus pushing up the company's LTM PE to 28.8 times. Recommendation history, View 14, historical VCSC target price compared to share price. Financial statements. And that brings me to the end of my presentation about the topic today. If you want to open a legal trading account, please contact us with the information on the screen so that we can support you. Thank you for listening and see you next time.